Euro is at parity. Its destiny is now with electricity markets. London. The euro's tumble under $1 for the primary time in many years places it en route for one of the worst years in its history, specifically if the power fee shock precipitated by the Ukraine battle tips the bloc into an extended economic disaster. The unmarried currency has teetered on the brink of parity versus the greenback for days, in the end breaching that degree on Wednesday. Its 11.8% year-to-date fall is sort of on par with losses seen in 2015, the year the European Central Bank unleashed massive stimulus. Wednesday's flow might also open the doors for a flow towards $0.96, analysts are expecting, with some expecting a fall to 90 cents if gasoline resources are disrupted a good deal in addition. The moves put the ECB in a bind. It is predicted to elevate interest fees subsequent week for the primary time due to the fact that 2011 to combat inflation going for walks at a document high 8.6%. Currency weakness exacerbates that inflation hassle. Yet the ECB cannot risk competitive policy tightening for fear of sending economic increase into opposite. We see room for a circulate all the way to 97 cents and in all likelihood even 95 cents, Olivier Conzoé, director in the currency crew at Asset Supervisor UBP, mentioned, noting the implication of the electricity crisis for Europe's economic system. Basically, we know it's all approximately Russia, he brought. The euro's modern-day leg decrease came after gas flows through Russia's Nord Stream 1 pipeline shut for 10 days for preservation. But if Moscow extends the shutdown, Germany, already in stage 2 of a 3-tier emergency gas plan, can be pressured to ration gas. If the gasoline pipeline that's closed for 10 days would not reopen and we get extra gasoline rationing, in that state of affairs we might not have visible the weakest ranges of the euro, said Christian Keller, head of economics research at Barclays, Lon, BARC. Spiraling electricity fees are already exerting a toll. Germany has just stated its first change deficit on the grounds that 1991 and investor sentiment has plunged below levels visible whilst the coronavirus pandemic erupted in 2020. Short-term options. In the near term, it could be all about technical factors and options markets, in which traders place directional bets or hedge currency publicity. Options to the song of $1 billion to $1.5 billion expire next week, and buyers said a conclusive and sustained breach of parity will cause orders to sell euros, doubtlessly sending it to $0.95. Even earlier than the modern-day euro dive, speculators have been positioned for weak spot, with bearish bets at the very best ranges thus far this 12 months, according to US CFTC statistics. But similarly gasoline costs are key. Analysis by using BNP Paribas OTC, BNPQY of ways currencies have traditionally achieved when electricity expenditures jump, suggests the euro suffers extra than other evolved currencies from gas rate shocks, falling a mean of 4–5% during such instances. J.P. Morgan NYSE, JPM, cited the Europlace as already dealing with parabolic gasoline rate spikes, with resources down 53% in June. Industrial powerhouse Germany has witnessed a 60% supply decline. It reduced its eurodollar goal to $0.95, a reflection the marketplace will become more and more willing to rate in greater possibility for an escalation. The worst case ought to deliver a test of $0.90, J.P. Morgan said, citing the Bundesbank's forecast of a 6% hit to German GDP within the first year if components prevent completely. Nomura's Jordan Rochester reckons the euro can also fall to $0.95 via end August, but in a situation where fuel garage tanks fail to replenish with the aid of winter, it is able to slip to $0.90. Similarly, Citi analysts are expecting a Russian supply halt will send fuel prices surging nicely above present-day degrees of round €170 according to megawatt-hour. All else being same, the euro will fall to 98 cents if gas hits €200. At the same time as at €250, it would change under $0.95, they told customers. In principle, the ECB ought to interfere by means of promoting bucks to prop up the forex as it did again in 2000, when the euro fell to around $0.83. But the bank has signaled it may now not step on this time, probable due to the fact the euro's actual change rate towards trade companions' currencies and altered for inflation is properly above wherein it was in 2002, the remaining time eurodollar parity changed into hit.